What if I told you that one single decision you make this year could completely change your financial future over the next 10 years? Think about it. If someone had invested in Microsoft, Apple, or NVIDIA a decade ago and simply held on, they wouldn't just have made money, they could have multiplied their wealth several times over. Meanwhile, most people are still waiting for the perfect time, scared by headlines, confused by market crashes, or overwhelmed by thousands of stock options. Inflation keeps rising, savings accounts barely keep up, and the cost of living in the United States continues to climb. The real question isn't whether you should invest, it's whether you're investing in the right companies that can grow for the next 5, 10, or even 20 years. Because, in the long run, the stock market doesn't reward hype, it rewards ownership of great businesses. In today's video, I'm going to break down some of the best US stocks to buy now for long-term growth, not based on rumors, not based on short-term trading trends, and definitely not based on social media hype, but based on fundamentals, industry dominance, financial strength, and future potential. We're talking about companies leading massive trends like artificial intelligence, cloud computing, healthcare innovation, and global consumer ecosystems. I'll explain why these businesses are positioned to grow, what makes them strong long-term compounders, and which type of investor each stock might be best suited for, whether you're aggressive and looking for high growth, balanced and focused on steady expansion, or conservative and aiming for stable returns. This is not financial advice, and you should always do your own research. But by the end of this video, you'll have a clear framework for identifying high-quality long-term stocks in the US market and the confidence to start building a portfolio that your future self will thank you for. So stay with me, because the difference between struggling financially and building lasting wealth often comes down to the decisions you make today. When we talk about long-term compounders in the US stock market, it's almost impossible not to start with Microsoft. This is not just a software company, it's a global infrastructure powerhouse. Microsoft dominates enterprise software, cloud computing, productivity tools, cybersecurity, gaming, and now artificial intelligence. Its Azure cloud platform continues to compete aggressively in a market that is still expanding as more businesses move online. What makes Microsoft especially powerful for long-term investors is its ecosystem lock-in. Once companies adopt Microsoft tools like Office 365, Teams, and enterprise solutions, switching becomes expensive and complicated. That creates recurring revenue and strong pricing power. On top of that, Microsoft generates massive free cash flow, giving it flexibility to invest in innovation, acquisitions, and AI expansion. The company has also integrated AI tools across its product suite, positioning itself at the center of the next technological revolution. For long-term investors, this means exposure to cloud growth, AI, enterprise software, and digital transformation, all in one stock. Microsoft isn't about explosive short-term gains. It's about steady, durable compounding over time. Next, let's talk about brand power and consumer dominance with Apple. Apple is more than an iPhone company. It has built one of the strongest ecosystems in the world. When someone buys an iPhone, they often buy AirPods, an Apple Watch, a MacBook, and subscribe to services like iCloud or Apple Music. This ecosystem creates loyalty that is extremely difficult for competitors to break. What makes Apple attractive for long-term investors is its shift towards services revenue. Services generate recurring income with higher margins compared to hardware. That means more predictable cash flow and stronger profitability over time. Apple also holds enormous cash reserves, giving it the ability to buy back shares, invest in innovation, and weather economic downturns. Even in uncertain markets, Apple's brand strength and customer loyalty provide resilience. Looking ahead, opportunities in augmented reality, AI integration, health tech, and further service expansion could unlock additional growth. Apple represents stability combined with innovation, a rare mix that has rewarded long-term shareholders for decades. Now let's shift into high-growth territory with NVIDIA. NVIDIA has become the backbone of the artificial intelligence revolution. Its graphics processing units, or GPUs, power AI data centers, machine learning models, cloud infrastructure, and advanced computing systems. As companies race to build AI tools and platforms, they need high-performance chips, and NVIDIA currently leads this space. What makes this company compelling is not just current demand, but structural demand. AI isn't a temporary trend. It's becoming part of global digital infrastructure. From healthcare to finance to autonomous vehicles, AI requires computing power, and NVIDIA provides that foundation. However, investors must understand that high-growth stocks can experience volatility, valuations can stretch, and market corrections can hit hard. That's why NVIDIA is often better suited for investors with higher risk tolerance and a long-term mindset. If AI continues expanding across industries, NVIDIA could remain a central player for years to come. This stock represents growth potential, innovation leadership, and exposure to one of the biggest technological shifts of our generation. Let's now talk about healthcare, a sector that combines defensive stability with long-term growth. Eli Lilly has emerged as one of the most talked about pharmaceutical companies due to its groundbreaking treatments in diabetes and weight management. With rising global obesity rates and an aging population, demand for innovative healthcare solutions is increasing. Eli Lilly's drug pipeline and recent product successes have significantly strengthened its revenue outlook. What makes healthcare attractive for long-term investors is that demand is less sensitive to economic cycles. People need medical treatment, regardless of whether the economy is booming or slowing down. Additionally, pharmaceutical innovation can create strong competitive advantages through patents and regulatory barriers. That said, investors should always consider risks such as drug approval processes, regulatory changes, and competition. Still, long-term demographic trends, aging populations and increasing healthcare spending make this sector structurally strong. Eli Lilly offers a blend of innovation-driven growth and defensive characteristics, making it appealing for investors seeking balance. For those who prioritize stability and income, dividend compounders can be powerful long-term holdings. Johnson & Johnson is a classic example. Known for decades of operational strength, the company operates across pharmaceuticals, medical devices, and healthcare products. One of its biggest attractions is its long history of paying and increasing dividends. Reinvested dividends can significantly boost long-term returns through compounding. During economic downturns, companies like Johnson & Johnson often hold up better than high-growth tech stocks because healthcare demand remains consistent. Its diversified revenue streams reduce reliance on any single product. For conservative investors, this type of stock can provide both income and moderate growth. While it may not double overnight, it has historically delivered steady returns with lower volatility. Dividend compounders are especially useful for long-term wealth builders who value consistency over excitement. Finally, for beginners or investors who prefer diversification over stock picking, exchange-traded funds offer a simple and powerful solution. The Vanguard S&P 500 ETF, commonly known as VOO, tracks the S&P 500 index, giving you exposure to 500 of the largest companies in the United States. Instead of betting on one company, you're investing in the overall growth of the US economy. Historically, the S&P 500 has delivered strong long-term returns despite short-term volatility. This makes VOO ideal for passive investors who want simplicity, low fees, and diversification. Many studies show that long-term index investors outperform the majority of active traders by consistently investing through dollar cost averaging and holding for the long term. Investors can benefit from compounding without constantly worrying about market timing. For those who don't want to analyze individual companies deeply, VOO can be a core foundation for a long-term portfolio. So here's the truth about building wealth in the US stock market. It's not about chasing the next hot stock. It's not about timing the perfect dip. And it's definitely not about reacting to every headline you see on the news. It's about owning strong businesses and giving them time to grow. Companies like Microsoft, Apple, and NVIDIA are shaping the future of technology. Healthcare leaders like Eli Lilly and Johnson & Johnson provide stability and long-term demand. And if picking individual stocks feels overwhelming, broad exposure through something like the Vanguard S&P 500 ETF allows you to grow alongside the entire US economy. But here's what matters most. The best stock is not just a great company. It's a great company that you hold long enough. The market will go up. The market will go down. There will be recessions, corrections, fear, and hype cycles. That's normal. What separates successful investors from everyone else is patience, discipline, and consistency. You don't need to start with thousands of dollars. You don't need to be an expert. You just need to start. Invest regularly. Think long-term, reinvest your gains, and, most importantly, don't let short-term noise shake your long-term vision. 10 years from now, you'll either look back and say, I'm glad I started, or I wish I had. The choice is being made today. If you found value in this video, comment below which stock you believe has the strongest long-term future. And make sure you subscribe for weekly US investing content that helps you build real wealth, step by step. Your future self is watching.